Folks, when it comes to building real wealth in the stock market, most people chase the hype of flashy tech names or short-term penny stock pumps. But smart money knows there's one sector that always gets funded, no matter the economy, no matter who's in charge of the defense sector. Governments may argue on healthcare or education budgets, but when it comes to protecting their borders, they open their wallets wide. That's why defense stocks have been some of the most reliable wealth creators of the last few decades. And right now, a new wave of opportunities is lining up that could take a small investment and turn it into a fortune. We're talking about companies with decades of dominance, contracts worth hundreds of billions, and technologies that shape the future of global security. That's why in this video, we're diving into 3 defense stocks that aren't just backed by hype, they're backed by Wall Street, strong fundamentals, and an unstoppable future. If you're serious about making money in the market, stick with me until the end, and don't forget to hit that subscribe button and turn on notifications so you never miss an update on the hottest opportunities out there. First on our list is Boeing Company, ticker symbol BA. Boeing is one of the largest aerospace and defense companies in the world. For over a century, it has been shaping the skies with its legendary commercial aircraft and innovative defense systems. The company develops and services commercial and military aircraft, space systems, satellites, and defense technologies, with customers in more than 150 countries. Its planes, including the 737, 747, 767, 777, and 787 families, make up nearly half of the global commercial fleet, which shows how deeply embedded Boeing is in global transportation. Looking at its latest financial performance, Boeing delivered 150 commercial airplanes in the most recent quarter, helping push revenue up to $22.7 billion. Production of its 737 line has ramped up to 38 per month, signaling operational improvements and growing demand from airlines around the world. However, the bottom line still showed weakness with a GAAP loss per share of 92 cents and a core loss of $1.24. Cash flow was also under pressure, with operating cash flow at $0.2 billion and free cash flow negative at 20 cents billion. On the surface, these numbers might discourage some investors, but what really stands out is Boeing's massive backlog. The company currently has $619 billion worth of orders waiting to be fulfilled, including over 5,900 commercial airplanes. This backlog essentially guarantees years of revenue once the company continues delivering aircraft at scale. As of now, Boeing stock trades at $221.26 with a market cap of $162.59 billion. Analysts remain bullish, with 20 out of 26 rating it a buy or strong buy. The average price target is $260.73, representing a nearly 18% upside, with the highest forecast at $287. This shows that even in the midst of challenges, Boeing has enormous recovery potential. With global air travel booming post-pandemic and defense budgets climbing, Boeing's dual role in commercial and defense aviation makes it one of the most compelling stocks to hold for the long term. Next on our list is Lockheed Martin Corporation, ticker symbol LMT. Lockheed Martin is the largest defense contractor in the United States and one of the most important defense companies in the entire world. With a share price of $487.44 and a market cap of $110.74 billion, Lockheed is a titan in security and aerospace, producing everything from advanced fighter jets to missile defense systems, radar technologies, autonomous systems, and space exploration equipment. The company operates out of more than 350 facilities worldwide and employs over 121,000 people, 20% of whom are U.S. veterans, giving it a direct connection to the mission it serves. In its most recent quarter, Lockheed reported sales of $18.2 billion, reflecting the steady demand for its defense products. However, profitability was impacted by large program losses, with $1.6 billion in pre-tax charges and another $169 million in additional expenses, dragging down earnings by $5.83 per share. Net earnings came in at $342 million, or $1.46 per share. Free cash flow was negative at $150 million, although the company generated $201 million in operating cash. Despite these headwinds, Lockheed continues to be extremely shareholder-friendly. It returned $1.3 billion to investors through dividends and share buybacks and reaffirmed its 2025 sales and cash flow guidance, signaling confidence in its ability to overcome program losses. Analysts are mixed on Lockheed's near-term price movement. Based on 17 Wall Street analysts, the average price target is $480.13, slightly below the current share price, with estimates ranging from $406 to $600. This suggests modest downside in the short term, but for long-term investors, Lockheed offers something more valuable than short bursts of growth. It offers consistency, reliability, and a steady dividend. Defense spending by the U.S. government and its allies continues to grow, and as the world becomes more focused on advanced defense systems, Lockheed's unmatched expertise keeps it in a dominant position. For income investors who want exposure to defense while collecting reliable dividends, Lockheed Martin remains one of the safest bets in the market. Last on our list is RTX Corporation, ticker symbol RTX. Formerly known as Raytheon Technologies, RTX is now one of the largest defense and aerospace companies in the world, trading at $163.35 per share with a massive market cap of $212.27 billion. RTX was formed in 2020 after the merger between Raytheon and United Technologies, creating a powerhouse that now operates through three divisions: Collins Aerospace, Pratt & Whitney, and Raytheon. These divisions allow RTX to cover both commercial and defense aerospace, giving a unique balance that few competitors can match. Financially, RTX has been firing on all cylinders. In its latest report, the company delivered sales of $21.6 billion, up 9% from the prior year, with strong organic growth also at 9%. GAAP earnings per share came in at $1.22, but on an adjusted basis, EPS rose to $1.56, up 11% year-over-year. Operating cash flow was $0.5 billion, though free cash flow was slightly negative at $0.1 billion. The standout figure here is RTX's $236 billion backlog, split between $144 billion in commercial contracts and $92 billion in defense orders. This shows not only how strong demand is for RTX products, but also how diversified its revenue streams are. The company has also rewarded investors by returning $0.9 billion through dividends and buybacks, while also raising its dividend by 8%. In addition, RTX recently agreed to sell Collins Simmons Precision Products business for $765 million, reflecting its commitment to optimizing operations and focusing on core strengths. Wall Street is bullish on RTX, with an average price target of $167.08, suggesting 4% upside from current levels. Some analysts see it going as high as $182, while the most cautious estimates place it at $141. RTX stands out because of its ability to serve both commercial aviation and defense simultaneously. While Boeing leans heavily on commercial jets and Lockheed is primarily defense, RTX sits comfortably in the middle, benefiting from growth in both industries. Over the past year, it has outperformed the S&P 500 in the year-to-date, 1-year, 3-year, and even 5-year timeframes. This is a stock that has proven its ability to generate consistent shareholder value, and with rising defense budgets and continued air travel growth, RTX is poised to keep delivering for investors. Well, that concludes our list of top defense stocks that have the potential to grow your wealth in the coming months. Boeing represents a turnaround story with a massive backlog and potential upside once its quality issues are resolved. Lockheed Martin offers stability, dividends, and unmatched dominance in defense technologies, making it a cornerstone holding for income investors. RTX delivers a balanced growth story, with exposure to both commercial and defense aerospace, strong financials, and continued shareholder returns. These are not random speculative plays. These are Wall Street-backed companies with strong fundamentals and bright futures. If you are serious about making money in the stock market, keep an eye on these names. And remember, always do your own research and consider your risk tolerance before investing.